perspective of the CV sector and the bus sector. Have a fabulous 23. Okay, we now move on to another company that's in the limelight. Castrol India is the one we're going to speak to on the news that the company has entered an agreement to acquire around 7% stake in Key Mobility for a total consideration of 487 crore. To alert our viewers, we understand that KI or Key Mobility is a part of the TVS group and is among the leading players in the auto service, maintenance and repair space. To discuss more on this, we are joined by Sandeep Sangwan, Managing Director at Castrol India. Good morning, Mr. Sangwan. Thank you very much. It is Key Mobility, isn't it? I mean, that's the way to pronounce it. Okay.
Yeah. Hi, morning.
Good morning. Okay, I just wanted to understand what are your plans for taking this 7%? What's the longer term, strategy behind this?
So first of all, thanks for inviting me on your channel and wishing all our viewers a very happy New Year. And I think if you look at our investment in Key Mobility, this is the first time Castrol India has made such a move because the ecosystem is transitioning very fast, especially as far as the independent aftermarket is concerned. And by coming together of My TVS, which is the brand Key Mobility goes with from a consumer-facing, customer-facing propositions, and Castrol, which is a trusted brand by consumers and customers, which has been in India for last 100 years. I think there are many synergies to step change the aftermarket ecosystem to give customers and consumers a better experience. And also as the ecosystem transitions to EVs as well. I think, so that's the broad thinking because Key Mobility being part of TVS Group is focused on building a business for the future. Castrol is looking at opportunities to transition to an EV world and participate with like-minded players in the market. So that's the broad theme.
Okay, all right. Hi, Sandeep, if you could give us a few more details. We currently have that 7% is what you're looking at for around 480 crores odd. Will you look at buying more stake? And this initial transaction will get concluded in January 2023?
Yeah, so thanks for the question. The transaction will get concluded in Jan 23. As far as the future is concerned, I think it's very early to speculate anything. I think our focus right now would be on creating value from the synergies that we have currently. And I think we will focus on that going forward, especially as far as 23 is concerned, and then we'll see how things go.
There's a lot of focus now on this entire electric vehicle space, on the EV supply chain as well. It's a shift for you away from your traditional products. So tell us a little bit about what the next 1 to 2 years would look like. How will you secure, yourself in this whole EV supply chain? How much capex are you willing to put on board?
So I think let me kind of share a few details. Castrol is very active in the EV space. So first of all, we work with a lot of many of the global OEMs, but also OEMs in India, such as Tata Motors, MG Motors, Renault, on the EV fluids. We supply EV fluids to them, and there's a lot of global partnerships that we are working on. So that's one. The second is we're also very excited. This quarter, we'll be launching something called Castrol On, which is a range of EV fluids for the retail market. It includes transmission fluids, greases, coolants, and that'll come into the market this year. The third area, I think you mentioned CapEx. We are part of BP, which is a multinational. And if you maybe you would recall, last year in the second half, BP announced that we would be investing about 500 crores in a battery thermal management facility, R&D facility in our global headquarters in Pangbourne, UK, to which Castrol India will have access, because I think battery thermal management is emerging as a key issue as people look to far more efficient batteries for extending range. And that's one of the key pain points that we want to try and address as Castrol. So Castrol India will have access to all that development happening in UK. Plus, we're also working with some of the two-wheeler OEMs in India, trying to address their challenges around battery thermal management. The other angle that I would say is we are also getting very active in service and maintenance space, and making the service and maintenance ecosystem in India EV ready. For example, we've just launched a program last quarter with the Automotive Skill Development Council of India, where we're training aftermarket mechanics to be EV ready from a maintenance perspective. So we've trained almost about 400 mechanics so far between Delhi and Chennai, which are the hot markets from EV perspective. So a lot going on in different spheres of EV and positioning Castrol as a EV future ready company.
Okay, now one can see that, Mr. Sangwan, that you want to diversify your risks away from just a fossil fuel exposure. But, you know, that kind of diversification and investments would come at a cost. Do you see, at least in the near term, any impact on your margins? I think you did operating profit margins of about 23% in the last reported quarter. Can there be pressure in the near term?
So I think, first of all, we have a very healthy balance sheet to fund our requirements from a CapEx perspective. The second is, I think, in 2022, because we operate Jan to December financial year, the pressure on margin was primarily on account of the input cost inflation that we've seen in the supply side shortages and shocks that the world is seeing. And that impacted our margin by a couple of points. But I think going forward, our intent is to keep our healthy margins. As you said, Q3 was about 23%. If I look at 3 quarters of 2022, we are at about 24% EBITDA margin. And our view is to protect those margins and continue investing behind our brand and business.
I think the last time we spoke about 23 to 25% margin band, so I think you're working towards that. What about volumes? Give us a sense of 2023. What kind of a volume outlook are you looking at? And also break it up for us, your mix of automotive versus industrial. What's the current mix and how is that likely to change?
Okay, so if you look at the market growth for 23, our estimate is that the lubricants market will grow at about 4%. Primarily driven by personal vehicles. We expect cars to grow at about 8%, two-wheelers to grow at about 4%, and then commercial vehicles will also grow. And our intent is always to grow ahead of the market, and you can put the numbers together. If the market is growing at 4%, we'll possibly be growing 1 or 2% higher than that. That's one. Sorry, Nigel, can you repeat your second part of the question?
What is the difference? You know, currently your contribution coming in from both the segments, automotive and industrial.
Yeah, so industrial is about 10% of our business, 10 to 12% of our business. Primarily, we are an automotive focused business, but industrial is also growing. But we participate only in specialized sectors around high performance lubricants, which help make manufacturing more efficient. And I think if I look at 23, the mix is primarily going to stay the same. I don't see any huge differences or any huge changes. Okay.
All right. We will let you go on that note. Thanks a lot for joining in. Let's take a quick break, though, on the market. Lots of individual stocks in focus, so we'll come back with that. Mitesh Thakkar will also join in for some technical trades, so do stay tuned in.